The triangle real estate market is shifting, but not in the way you might think. Prices, they're a little bit down. Inventory is up. Interest rates are still sitting high. So what does that actually mean for you? If you're a buyer, does this finally mean you have the upper hand? If you're a seller, is now the right time to cash out or hold tight? The truth is, there's way more to this market than just the headlines. And today, I'm going to break it all down for you. I'm Gretchen Coley, founder of the Coley Group, the #1 Compass team in the Triangle. And today, we're diving into why Wake County's market is shifting and what's really driving these changes and what you need to do if you're buying or selling in 2025. So let's get right into it. All right, so first things first, let's talk about what's changing in Wake County real estate and more importantly, why is this happening? Number one, home prices have dipped slightly. The median home price is sitting around $450,000, which is $10,000 lower than December. But before you start thinking this is the start of a major downturn, it's not. This small dip is seasonal. Every January, we see prices pull back just a little bit. The holiday slowdown means that fewer buyers are shopping, which takes some pressure off of demand. This is completely normal and it's not a sign of a market crash. But here's what is different from previous years. There are more homes on the market. Right now, our inventory is sitting at about 4,094 homes for sale. That's a significant increase, and it means that buyers have more choices than they've had in a while. So why is inventory growing? Well, there's two big reasons. One, homes are taking a little longer to sell. The average time on market is now 51 days. That's a shift from the days when homes were flying off the shelves in bidding wars. Number two, higher interest rates are keeping some buyers on the sidelines. While we're seeing 7% mortgage rates, which means some buyers are waiting it out, hoping for lower rates before they make their move. This has also led to a 20.4% drop in lending activity, meaning fewer people are applying for mortgages right now. So what's keeping interest rates up? It all comes down to the broader economy. Lenders and financial markets are looking at inflation, job reports, and tariffs. And right now, they're not seeing enough signs to bring rates down. Inflation is still a concern. Even though it's cooled from its peak, cost of goods and services aren't dropping fast enough, which keeps pressure on borrowing rates. Job reports are strong. Normally, a strong job market is a good thing, but when unemployment stays low and wages keep rising, it makes the Fed hesitant to cut rates because they don't want inflation to spike again. New tariffs on imports are also adding to the mix, increasing costs for businesses and consumers, which makes lenders cautious about lowering rates too soon. All of these factors combined with borrowing money is still expensive, and until we see signs of an economic slowdown, rates are likely to stay in this range for a little while longer. So, how does this all impact you? If you're a seller, the days of listing at any price and getting multiple offers overnight, well, those days are gone. You've got to price your home right from the start and work with an agent who knows how to market your home in the right way to the right people. But the good news is, buyers are still out there, and the ones who are shopping right now, well, they're serious. If your home is move-in ready and it's priced correctly, it's going to sell, and it's going to sell at a great number in a very short amount of time. For buyers, I know, I get it. 7% interest rates aren't fun, but here's what's different now. You can actually have leverage. Sellers are open to covering some closing costs, offering price reductions, and you have time to shop and negotiate. And let's not forget, you can always refinance when rates go down. But home prices, they're not guaranteed to stay down. So if you find the right home, waiting could end up costing you way more in the long run. Now, let's talk about affordability, because home prices and interest rates are only a part of the equation. What really matters is how much home can a buyer buy and actually afford based on their income. In Wake County, a comfortable living wage for a single adult is about $49,740 per year. That breaks down to $23.90 an hour, with housing cost around $1,530 a month. For a family, it's even higher. A household with 2 adults and 1 child needs around $99,680 per year to live comfortably. And if you've got 2 kids, it jumps to over $111,000 a year. And trust me, I know how expensive children can be. Now, here's where it gets tricky. Since the median home price in Wake County is $450,000, if you put 20% down with rates at 7%, that means that your monthly mortgage could be well over $3,000, including taxes and insurance. For many buyers, that's simply out of reach, which is why we're seeing fewer people entering the market. And when you pair that with rising costs for everyday essentials like groceries, childcare, healthcare, and transportation, it's no surprise that lending activity is down 20%. This is why buyers today need a strategy. If you're looking to buy, you have to consider not just the price of the home, but your long-term financial picture. And that's where working with the right agent and someone who understands the market, but both market challenges and affordability challenges, becomes even more important. Here's the bottom line. The Triangle real estate market is still really strong, but it's evolving. If you're thinking about selling, you need to have a strategy. If you're thinking about buying, this is your time to negotiate. And that's where we come in. If you're wondering what all of this means to your specific situation, well, let's talk. Reach out and we will walk you through exactly what's possible for you right now and how we can help you achieve your financial goals. All of our contact information is in the description below. And hey, if you're still looking for the perfect neighborhood, take 5 minutes and take our neighborhood match survey by clicking the link down below. You'll get matched with your ideal community right here in the Triangle based completely on your budget, what you're looking for in a home, and your lifestyle. Make sure you stay ahead of the market by subscribing. We do these updates every single month, so you're never unprepared for Raleigh's evolving real estate market. I'm Gretchen Coley with the Coley Group, and I'll see you right here in Raleigh.